The role of financial advisors has changed considerably over the past several decades. And here to talk with us about that is Tony Davidow, author of Goals-Based Investing, a soon to be published book. Tony, welcome.
Thanks, Bob. Thanks for having me.
So give us, if you would, a high level take on the evolution of wealth advisors over the past several decades.
Yeah, it really has been an evolution. It really has, forced advisors to think about how they serve clients, the skills, the capability that they need to become successful, the investment capabilities they need to bring. And I would say that, candidly, some advisors are well along in that journey. Some have just started, and some have refused to see the signals and decided to do things the same old way. But it is an evolution. It's a good thing for the advisor, and it's a good thing for clients.
So I remember a time when advisors were not necessarily called that. They were called, before my time, customers men. And then today, some of them are now wealth advisors. Do clients still perceive what their advisors as transactional based as they once were when they were called customers men?
And I think that is really the litmus test, right? So as much as advisors, and many are taking, advanced courses to hone their skills and expand their capabilities. But I do wonder, because I hear repeatedly from a lot of my friends and from clients directly who perceive the advisor's value proposition is outperforming the market, or the advisor's value proposition is pitching them an idea. Here's a new fund, here's a new stock, rather than thinking of them as the quarterback of the whole relationship, where they're providing a whole array of wealth management solutions. So if the client can't articulate your value proposition, you start to wonder, have you really transformed the way that you serve them?
And wealth management firms, have they responded to this sort of new way of doing business with clients?
They have, and I go back to my days at Morgan Stanley in the late 1990s. I think with the proliferation of high net worth clients, many of whom were created because of the dot-com bubble, as a lot of wealth was created, a lot of those firms pivoted to say they wanted to serve those clientele, but they also understood that advisors need to expand their skills and capabilities. So developed advanced training programs, which I was involved in creating and delivering. And I think, again, many of those advisors are on that journey. Some have completely transformed the way that they do business. Others are more of a hybrid, where they still do things the old-fashioned way, but they sprinkle in these sort of capabilities. But I would argue, as we've talked about in past modules, if advisors aren't on that journey, if they're not investing in themselves, if they're not transforming the way that they serve clients, they risk being replaced by a robot who can do a lot of these, rote sort of things in a very automated, systematic way.
So in your blog and in the book, you talk about the shift to team-based models. Talk more about that.
Yeah, so the reality is, if now we're thinking beyond just the portfolio, and we're thinking about, we need to think through tax management and trust and estate issues. And for many high net worth clients that have large concentrated positions, you almost need a team of specialists who can really think through, what are the capabilities I need to bring to my client? How do I effectively coordinate those? Those shouldn't be solved in silos. They should be part of an integrated solution. So many advisors have adopted more of a team approach, and that team often has core capabilities across the team. But the other thing, from a client perspective, they feel like I've got a team of people working for me, as opposed to a single person who, again, how could they possibly understand all of my needs and objectives if they're handling hundreds of accounts? So I think we've seen not only the migration to a team structure, but also an attempt to right-size the practice. What's the right amount of clients that you can effectively serve to bring all those capabilities?
Yeah, it certainly strikes me that no one person could become an expert in income taxes, estate planning, insurance, health insurance, investments, right, et cetera, retirement plans, employee benefits.
It's too complicated and getting more complicated all the time. Exactly.
Yeah. So in the blog, you also mentioned, you highlight the different coverage models. Do you want to walk us through those?
And I think it's important because, again, with my experience dealing with many high net worth clients over the years, it's confusing to them. And why it's confusing is sometimes the lines are muddied. In my view, at the very, very top of the pyramid are the Morgan Stanley private wealth advisors, the UBS private wealth advisors, Goldman Sachs, JP Morgan. And the reason I say they're at the top of the pyramid is they are exclusively focused on clients with 20 million or more in investable assets. They're virtually all structured as a team, and they have deep expertise of all the complexities that high net worth and ultra high net worth families face. They deal with it every day. Below that, you have what I would refer to as the wirehouse model, which is, the Morgans, the Merrills, the UBSs, and they are thriving to serve those clients well. And a lot of them do have advanced training, and a lot of them have structured themselves as a team where they've got those expertise kind of embedded in their team model. But oftentimes they're still serving hundreds of clients. And although they have the same sort of experience, they may not have the experience of somebody who's a $100 million client who sold their business. And perhaps that's the largest client they've ever dealt with. And maybe they've never dealt with some of the related complexities of large concentrated positions and some of the tax consequences of selling business and setting up trusts and estates. And then at the lower end, you have what we've been talking about in past episodes, which are kind of that digital robo offering, which is kind of a scaled solution where automation helps provide more asset allocation, financial planning advice, but it's less customized and it's less geared towards high net worth clients. The challenge I see in the marketplace, though, is from a client perspective. A client hears a lot of people talking about the same sort of capabilities, and it's very confusing. They can't distinguish that two people with a Morgan Stanley business card may be serving different segments of the market, or two people with a UBS business card may be serving different segments of the market and have different capabilities and different sort of team structures. So again, I think as an industry, we need to do a much better job communicating the differences to high net worth and ultra high net worth clients.
Yeah. In the blog, you also have a subhead titled Putting Theory into Practice, which I think is where most people want to figure out the theory is one thing, but the practice is another.
It is. And, it's great to take these advanced training programs. And, you and I are affiliated with the Investments Wealth Institute, and there's the CPWA and the RMA and the CIMA designation. There's the CFA and KIA designation. That's great to get the advanced training. But unless you're practicing, unless you're honing those skills, unless you're dealing with clients who constantly have those sort of complex sort of issues that you're helping them navigate, it's just theoretical. And the real practice is, how do you effectively incorporate, somebody who sold their business? What are the gifting strategies? What are the tax management strategies? Have you worked with the family to set up a preset diversification program? It sounds good in practice, but unless you really use it, and unless you practice it all the time, and unless you think about how all those capabilities need to be integrated, it's just a theoretical exercise for clients. So to provide a little life to some of these theoretical things, I actually share some personal experiences, as I do in my book, to really provide a little bit of substance to it. This is how clients think about it. This is how we help clients navigate all of these things in a seamless and integrated fashion.
I love how you end the blog by saying the point of this blog is that experience and expertise really does matter. Sums it up quite well.
It really does, not just in the chapter, but I think in general. And I think for folks like you and I have been around for a long time, you can't replicate the experience. It's one thing reading something in a book or going through a course, but unless you've actually experienced it yourself and you can impart that shared experience and wisdom with clients, I think it's quite a different outcome.
So anything that we haven't covered that you want to make mention of, or anything that you want to mention once again that for emphasis?
Yeah, I would just kind of summarize with, I really do think that experience does matter. And I think for individual investors, they should really take the time to understand, who are they working with? What are the core capabilities? Do they have experience dealing with complex trust issues, gifting strategies, experience dealing with large concentrated positions? Do they think through the tax implications, or are they just in the process of selling you a product? And again, it may all sound very similar to individual investors, but there's a big difference in the coverage model, the experience that you bring, and ultimately the team that you've structured to provide those capabilities to investors.
Yeah, and I suspect for the FAs that are watching this, it's a point of differentiation that they can do all the things that you mentioned in terms of estate planning, gifting strategies, concentrated stock positions.
And I would just add one last point on that. You're exactly right, that I think a lot of the financial advisors or the wealth advisors actually spend a lot of time thinking through, this is my new more modern sort of way of thinking about wealth management. But you made the point earlier, if the client doesn't perceive you that way, if they still perceive you as your value proposition is outperforming the market, there's a mismatch in expectations. So one, it's important to develop those capabilities, but two, it's really important that the clients perceive and see the difference in the way that you serve and engage them.
So the book is titled Goals-Based Investing. It comes out this fall, published by McGraw-Hill. Its author is Tony Davidow, my guest. And Tony, I want to thank you for walking us through the chapters in the book and the blogs that you've written about it.
Oh, thanks so much, Bob. My pleasure.